Bitcoin, when people approach Bitcoin, maybe from another market, particularly equities, like they're used to having metrics behind companies that they're investing in. And of course, Bitcoin's a network. It doesn't have any of these sort of profit and losses and, strategic quarterly reports. But what we do have is this very visible ledger that's totally available on the blockchain. So this field is really grabbing the data on the blockchain and essentially dissecting it for signal. For example, like if the price is about to crash, you can often see telltale signs like long-term investors, maybe investors that have been in the market for 5 years starting to sell. And obviously those are the investors that have more experience in the market than the guys that just bought 6 months ago who are buying, So that tells you something about what's happening underneath the market, underneath those charts that we see as speculators and traders, which is, price and volume. With on-chain analysis, you see kind of like a ECG of the entire animal of Bitcoin, exactly what's happening, the different facets of the network, what investors are doing, what miners are doing, what exchanges are doing, even what corporations are doing when they're buying or selling. So there's a forensic trail of the demand and supply and this entire market seen on the blockchain. When I look at the network, there's so many different metrics you can look at, and they all get used in different parts of the cycle. And currently, the most reliable metrics are all the views into demand and supply, both locally and in the macro sense. So, I'm looking at a chart right now in front of me, and it's looking at what the long-term investors are doing. And so, for example, I work with Glassnode, which does the raw on-chain data, and they process it, and it's a service that many people can use. I pull that in, and for example, they do a metric called liquid supply, and you can look at the blockchain. You can see the millions and millions of addresses. There's multitude of addresses, and then they do the hard work of going, these addresses, who owns them? And they can cluster these addresses into what looks like entities, individual participants that have their wallets spread across all these addresses. And then they look at the interactions between them and the historical interaction. And this metric is very, very telling, because they can categorize the guys that buy. They buy without selling. They're like 75% of their transactions are more Bitcoins coming in, very few leaving. And then they have another category, which is liquid and highly liquid. And those guys are more speculative. You look at their history, and they buy and they sell and they trade. So we can kind of look at that movement between speculative hands and long-term holders. And obviously, as all the supply moves to the long-term holders, the guys that do not sell, you create a huge supply shock, and there's a shortage of coins left by the speculators, and the price just runs up. And so that's kind of like a demand and supply view using their historic behavior. And so that's one of my favorites. Another one is just sheer doing the same thing but much rougher. Like you say, anything in a wallet held by self-custody or cold storage, those are the coins you cannot buy. And the coins you can buy are the coins that are left on the exchanges. And you can run that ratio, and you get the similar kind of metric. And that's demand and supply also. The supply is what's on exchanges, and the demand is that is held by investors who've got that locked away in cold storage. So those kind of metrics are the most telling and reliable, because, I cut my teeth using volume on the network, because that was kind of like a proxy to buying and selling, right? Here is the ratio. The green line is that ratio, the ratio of the guys who aren't selling to the ratio of the guys who hold coins. and are likely to sell because they're speculators. And you can see that ratio tracks the blue line, which is the price, very closely, right? So this opened up this research into this whole family of supply shock, which is essentially the coins you're not going to be able to get divided by the coins you can get. And remember, these are coins that are sitting in people's wallets in cold storage. So, you think about the process of which, them selling. The first thing that happens is that they will start to move their coins to the exchange to sell. And so you already get a lead time here. And you can see this in the green, that the guys that never sold started selling, and they started losing their supply to the speculators. And so that started dropping. And then you see the price was rallying, even though these guys were unloading their coins. So there was a burst of liquidity finding itself onto the market, and that was forewarning for this crash. And as you can see here, as the end of the world had come and the sky was falling, if you were on Twitter and listening to all the analysis from people on Twitter doing technical analysis mainly, they were going, this thing is just lower, 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 lower. This resistance this support's being weakened. You can see the last support here. That fell. We expected to come down into this zone here. There's a bit of support there and a bit of support there. Meanwhile, these guys, Rick Astley was buying, his long-term investors were buying off speculative hands, and we had a classic divergence of price, and there was no way that this could continue down while these guys were buying, because fundamentals always prevail. Eventually there's a shortage of coins on speculative markets, and no one, the price has to rally because there's a supply and demand mismatch. And so this is supply shock. It's kind of figuring out demand and supply on the exchanges before the bids and asks go onto the order books, because you've seen it in the wallets. And so the purple line is another version that's just using the coins on the exchanges and the coins that aren't on the exchanges that are already locked away in wallets. And you see that both very much track price very closely, slightly different, like it raises up further here, more than the liquid. So it's kind of a little bit more responsive at times. And then, there's other versions which is a different metric, very similar to the green line, which I won't go into. But, obviously this is saying right now the price is going up. And like one of the things that I might do is go, well, that's interesting. Look, we're at this level of supply shock here. And wow, the price was up in this 57,000 range. So that's just looking back and seeing how the market previously valued the coins at the similar levels of demand and supply.